All right, let's talk about it. It's the big financial question we all ask ourselves every single year. Am I going to get a tax refund or am I going to owe? Well, today, we're going to help you find that answer with a really simple guide to the 2026 tax season and all its new rules. Let's break it down. This question is on every taxpayer's mind for a pretty good reason. The answer can have a huge, huge impact on your budget for the year. And that's exactly why getting an early estimate can be a total game changer for your financial planning. So, this year, things are going to look a little different. That's all thanks to a major new law, sometimes called the One Big Beautiful Bill Act, or OBBBA for short. Now, it's rolled out some pretty big changes, but don't worry, we're going to make it super simple and show you exactly what's new. Okay, so how can you possibly figure out where you stand with all these new rules? Well, it's actually way easier than you might think to get a surprisingly clear picture of your tax situation. And you don't need to be a tax pro or have some fancy software either. We're going to walk through a really straightforward 4-step process that literally anyone can use. All you need is a calculator and a few key pieces of info to get a really solid ballpark figure. So let's jump right in with step 1, figuring out your taxable income. See, before you can even think about calculating the tax, you've got to know what income is actually being taxed in the first place. It all starts with this number. Here's a really key concept you've got to understand. You're not taxed on your total salary. The government lets you subtract certain amounts first. We call those deductions. Whatever's left over, that's your taxable income. And that's the number we really, really care about. Okay, first things first, find your filing status. Are you single, married, filing as head of household? You get to subtract that standard deduction amount right off the top of your yearly pay. I mean, for a single filer, that's over $16,000 that you won't pay a single dime of tax on. And this is where that new OBBBA law really starts to make a difference for a lot of people. It's brought in 2 brand new deductions that could lower your taxable income even more, and they're aimed specifically at people who earn overtime and tip income. So if you were a single filer and you earned any overtime this year, listen up. The new law lets you deduct the premium portion of that pay, the extra time and a half pay, all the way up to $12,500. It's a really targeted tax break that actually recognizes all those extra hours you're putting in. And for tipped employees, the new benefit is also pretty huge. If you work in the service industry, you can now deduct up to $25,000 in qualified tips right from your income. This is a massive shift in policy that could make a real, tangible difference for millions of workers out there. All right, so once you have your taxable income number, the next 2 steps are all about figuring out your actual tax bill. This is going to involve a little bit of multiplication and then, my favorite part, some subtraction. Now, the U.S. has this progressive tax system with a bunch of different brackets, but for a quick estimate, most middle-income earners are going to find their overall effective tax rate lands somewhere between 10 and 12%. It's simple. Just take that taxable income number you figured out and multiply it by an estimated rate, let's say 12%. So, for example, if your taxable income was $50,000, your estimated tax bill, your liability, would be around $6,000. But wait, we're not done. Now we get to subtract. This is where the new child tax credit comes into play. For every single qualifying child you have, you get to subtract $2,200 directly from your tax bill. That's a powerful dollar-for-dollar cut in the tax you actually owe. And here's a really important detail. Part of this credit is refundable. What does that mean? It means if your credits are so big they wipe out your tax bill completely, the government will actually send you the rest of it, up to $1,700 per child, as cold, hard cash back in your pocket. Okay, we've made it to the final step. This is the moment of truth. We have our estimated tax bill, right? Now all we have to do is compare that number to the amount of tax we've already paid throughout the year from our paychecks. So the final piece of this puzzle is just one single number on your very last pay stub of the year. You just have to find the line that says federal withholding and look for the year-to-date or YTD amount. That's it. That's the total tax you've already paid. And the final math couldn't be easier. If the amount that was withheld from your paychecks is more than your estimated tax liability, boom, you get a refund. If it's the other way around, you'll owe the difference. It really is that simple. Now, that 4-step calculation is a fantastic way to get a quick estimate. But hey, if you'd rather just skip the manual math and get an even more precise number, there are some excellent free tools that'll do all the heavy lifting for you. These online calculators from places like TurboTax and H&R Block have all the new OBBBA rules already baked right in. Even the IRS has its own official estimator. You just answer a few simple questions, and they'll spit out a really precise answer in just a few minutes. So the real key takeaway here is this. Whether you use our 4-step method or an online tool, you don't have to wait until tax day to find out where you stand anymore. You now have everything you need to get a really clear preview of your 2026 tax situation. And that leaves us with one final, powerful thought. Knowing this information early, whether you're looking at a big refund or you might have a bill coming, it gives you the power to plan. So the real question isn't just what your outcome will be, but now that you can estimate it, how are you going to adjust your financial strategy for the year ahead?